Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy Podcast, and this week we're going to do some market updates, and we're going to do a little compare and contrast. Does it make sense to do a refinance yet? I don't know. We'll see. I mean, rates are starting to move a little bit. Could make sense for some. For some, you may want to pump the brakes and just wait a little bit longer. I do have a special guest today, Justin, my producer on the show, and a junior loan officer. You've probably spoken to him over the phone since he refused to come on the show last time he was visiting from San Diego. Well, maybe I'll just make him a permanent guest and embarrass the hell out of him. So we'll see how this goes. Oh, that's good. All right. Let's dive in, shall we? So CFPB came out. That's the Consumer Finance Protection Bureau. They're the big, giant, 400-pound gorilla in the room here that's always watching over us and making sure we're not doing anything bad. Well, they're jumping into a segment of the market which probably is underserved in regards to regulation. So the CFPB land contracts are under federal mortgage protections, right? So the reason this is a little bit weird, again, I'm not an attorney, but in certain states, you can actually do private mortgage financing as long as you do under a certain amount of loans. You actually don't even need a license to do them. So that's why I find this a little odd that they're able to kind of do this, I could say. I think it's a good thing that they are, right? Because a lot of people do get taken advantage of in this segment. So the CFPB has declared that contracts for deed, also known as land contracts, must adhere to federal home lending rules and include essential consumer protections. In these contracts, sellers retain ownership of the property until the buyer basically completes all the payments, and this often leads to predatory lending practices. They typically involve inflated home prices, high interest rates, balloon payments causing lower income, maybe minority borrowers to lose their homes and possibly their down payment. So in a nutshell, what they're saying is, let's say a seller, is selling a property that can't move and no one wants to buy it. They entertain land contracts. A lot of times the land contract will come into place where a buyer's not quite ready to purchase a home, right? They either don't have a down payment, maybe their debt ratios are too high, or maybe they're working on their credit score, right? We see those a lot. And so they really love the house. They want to buy it. They enter into something called a land contract or a lease purchase option, something similar. It depends on where you're at, whether you're familiar with certain terms. It is usually recorded with the county. So this is going to be a sales agreement or an installment contract that you typically record with the county recorder's office to show a legal binding agreement. Well, what this usually comes with is a non-refundable deposit up front, showing your commitment as the buyer to purchase the home from the landlord or the seller, okay? Shows that you're serious. I've seen 1,000, which is very low actually on those. I've seen percentages like 5%, 10%. I've seen $5,000, $10,000. I've seen them all over the map, okay? But this is typically a risk to the seller. So usually it's considered private financing or seller financing, and they can dictate the rules all they want. It's their property. They can sell however they want. The buyer agrees. It kind of is what it is, right? Two adults entering a legal contract. But the CFPB states that they have been reviewing land contracts and overseeing them a little bit closer, and rates are absurd. I'm going to guess like 10%, 12%, 15% even. And when that happens, the buyers are having a hard time keeping up with those payments, or make sure that they're able to keep up with the payment and work on whatever their issues were in order to qualify for a mortgage. And then after the 12-month rule, 24, 36, whatever the land contract is for, a lot of them are falling out. They're losing their $5,000, $10,000 deposit that they gave to the seller at the beginning, and it's creating some problems. So it's a good thing that they're looking at these. A lot of people can be taken advantage of. Land contracts have their place in our market. That is for sure. Helps some buyers that aren't ready just to be able to lock up the home that they prefer to live in. So, FYI there, for any landlords that are looking to entertain or sellers entertain land contracts, you must be careful. You may want to consult a lender about average rates, market rates, things like that, to make sure you're not going overboard on what you're charging a consumer, because that might come down on you. Okay. There's some other things I wanted to touch on, but one of the biggest things is we've been talking about rates moving over the last about, I don't know, 2 weeks-ish, right, week or two, rates have slid a little bit, right? So Fed announced that we're going to have a rate cut in September. That was kind of confirmed based off of jobs numbers and the consumer price index kind of coming down, sliding down around 3% again. And so rates slid a little bit. What a lot of people don't talk about is rates slide immediately, knee-jerk reaction, they drop into the low sixes, and then they kind of pop back up just a little bit on us, right? They kind of worsen a little bit. No one ever talks about that. But the big talk is refinances are up double than what they were last year, which is pretty damn easy, considering the fact that last year no one's refinancing unless you were cashing out to access some equity, okay? So I wanted to do a quick scenario. So this is just a $200,000 example. I'm using principal and interest only. That's it, okay? Make this easy. So let's say you closed last year or even the beginning of this year, and you had a 7.5% rate. That principal and interest payment on a 30-year fixed-rate mortgage was $1,398, okay? And let's say with the rate slide, you wanted to do a rate term refi, and you get a 6.5, for example, a 1-point drop, right? Which is usually the target that we suggest, if not more, of course. Loan amount size does play a role, okay? Because three-quarters of a point might make sense on a $300,000 house. Just depends on the buyer. Everyone's a little bit different. But 7.5, again, 7.5, $1,398. 6.5 is $1,264. Okay, so what is that? $134 savings. So a 1-point drop on a $200,000 loan amount, $134 in savings. To some people, that may not make sense. To a lot of people, it makes total sense, right, to pull the trigger on that. It's over $1,500 a year that you're saving. Well, you have to read, that's doing a 30-year mortgage again. So if you close in the last 18 months, you're going to go from 29 years remaining or 28 years remaining up to back to a 30. And some people don't like resetting it, and that's completely understandable, but that's part of being able to save some of that money on your monthly basis. So let's talk about taking that savings and applying it back to the mortgage in lieu of pocketing $134 a month in savings. Let's talk about just applying it to the refi, okay? So let's say you save a point, and we get down to the 6.5, you save $134. That's what? $67 bi-weekly, right? So if you're watching my videos, last week we did a reshare of Ray from GemCap, and we talked about the bi-weekly or the equity building system that they have, which, again, not a requirement to use a third party. But if you can set up bi-weekly payments, I still suggest doing so, whether it's through us or GemCap, whether it's through your loan servicer, or whether you're just, disciplined enough to do it yourself, right? That's great if you are. A lot of people just aren't, and that's okay too. So if you simply did this refi, got the 6.5, saved money, if you just do the equity building system, you paid it off in 24 years, okay? So you save 6 years on your loan, and that's going to save you $51,000 in interest. But let's say you weren't real sure if it made sense to reset your mortgage to a 30, and maybe the savings just wasn't enough for you. Well, here's another idea. Why don't we do the refi, save a point, which is $134 a month, and apply it into a biweekly pay system, but use the extra $134 or $67 every 2 weeks and apply it to the mortgage. If you do that, you're paying it off in 19 years. Okay, so now you're taking your 28 years remaining, and you're going to make it 19 years remaining. You just cut off 9 years off your mortgage. And with that idea, on a $200,000 loan, this is a comparison, right? So if you went ahead and paid all your interest for 30 years versus doing the biweekly with an extra $67 every 2 weeks, that's going to save you $97,958 in interest over that period of time. That is absurd. Absurd. So that's half your house, right? You saved in interest. So guys, again, rates are moving, okay? Take a look at it. It may make sense for you. It may not make sense for you yet. On that topic, because of where the consumer price index is and some of the jobs numbers that have come out, they're talking about possibly another one at the end of the year. Okay, so I don't know if that's going to happen or not, but there's some potential for it. The Fed funds rate I mean, they've been keeping anywhere from 5.25 to 5.5 as the Fed funds rate. And their target, possibly by the end of the year, is 4.5 to 4.75. So with this most recent announcement that's going to happen in September, again, when that rate cut happens in September, the market's already adjusted for it. Our market is all based off of speculation. They talk about doing something, our market reacts. So when it happens in September, and they're expecting now a 0.5 point drop on the rate, a 0.5 point drop in the rate. Don't think you're going to see a massive drop again, okay? We've kind of already reacted to it, and that's where we're at today. But November, December is possible for additional rate cuts, possibly another 0.5 point. That could move us consistently back into the upper fives, consistent. So everybody's like, well, I just saw 5.25 just the other day. Well, I've got news for you. They're charging you 3 points to do it. I just saw a loan estimate from one of the largest companies in the country. One of my clients reached out and was like, hey, they're quoting me 5.375. Can you match this? Sure, I can charge you $13,000 in points if you want to do that, but it doesn't really make any sense, does it? So when I'm talking about rates, I'm talking about average rate across the market in regards to a par rate without charging you a bunch of money. So keep that into account when you hear me talking about this, because a lot of people see me on TikTok all split up on videos and not have a whole lot of reference to it. So check out the full video. All right. So that's all I got for you guys this week. I hope that information is helpful. If you do own a home, keep an eye on rates on the market. Contact your lender. Update your file. Let's get ready for the refi. Okay. Let's just make sure the credit scores are good, job time, everything's up to date. That way, when this market slips a little bit more, we can pull the trigger when the rates kind of bottom out on us and we're not playing catch up. Because I got news for you right now. Anybody that owns a home out there, and even renters, all right, you're getting blasted via mail, via phone call, via email, text. Everybody's buying leads, refinance leads. It's crazy. So don't just pull the trigger on the first thing that you see. Do your due diligence. Contact the last person you worked with. Make sure the deal's correct. Make sure it's legit. Compare. All right. That's all I've got for you. All right. So make sure you guys subscribe on YouTube. All right. Check us out on Apple Podcasts and Spotify. And I'll try to stop saying all right and right next time. Catch you all next week.